People keep talking about an $89 silver prediction, but that was never the real story. The real story is what's happening behind the scenes right now, quietly, systematically. And if you're only watching the price on your screen, you're already late. Because while paper silver looks calm, the physical silver market has just crossed into something much more serious. Phase 2 has begun. This is USA Trending News, and before we go deeper, make sure you like this video and subscribe to the channel. We break down what mainstream headlines miss, and this story is moving faster than most people realize. Now, here's the part nobody wants to admit. Didn't fail. The $89 call didn't fail. It simply distracted people. While everyone argued about price targets, physical silver was quietly disappearing. Not from charts, but from vaults, from exchanges, from supply chains that depend on real metal, not promises. Phase 1 of the silver shortage was easy to ignore. Delays, higher premiums, temporary supply issues, they said. Dealers blamed logistics. Mints blamed demand spikes. Investors were told everything was normal. But Phase 2 is different. Phase 2 is when stress moves from retail into the system itself. Right now, large industrial buyers are securing silver directly, long before it ever reaches the open market. Solar manufacturers, defense contractors, and electronics producers are locking in supply because they can't risk running short. When industry starts hoarding quietly, it doesn't make headlines, but it changes everything. At the same time, major exchanges are showing something unusual. Inventory numbers look stable on paper, yet delivery times are stretching. Contracts are being rolled instead of settled. Cash payouts are becoming more common than metal deliveries. These are not signs of abundance, these are signs of strain. And here's what makes Phase 2 dangerous. Price stops reflecting reality. Paper markets can suppress price longer than people expect. But physical demand doesn't disappear. It builds pressure, slowly, silently, until one day it snaps. This is why the focus on a single price number misses the point. $89, $100, even $50 don't matter if physical silver isn't available when it's needed. Shortages don't announce themselves with sirens. They reveal themselves through behavior. Who is buying, who is securing supply early, and who is suddenly very nervous about future deliveries. What we're seeing now is smart money shifting strategy. Less speculation, more possession, less leverage, more certainty. That doesn't mean panic tomorrow. It means preparation today. And here's the part many investors don't want to hear. Phase 2 is where most people get emotionally shaken out. Prices may stay flat. They may even dip. Headlines will claim the shortage is overblown. That's exactly when long-term positioning happens quietly. History shows this pattern again and again. Commodities don't explode when everyone agrees. They move when pressure builds silently and confidence disappears all at once. Silver has always been a small market with outsized reactions. That hasn't changed. What has changed is demand coming from multiple directions at the same time. If you're still watching silver only as a trade, you're missing the bigger picture. This is about supply security, about trust, about what happens when too many claims chase too little metal. Before we wrap up, I want to hear from you. Do you think the real silver shortage will show up first in price or in availability? Drop your thoughts in the comments. Your perspective helps shape future coverage here on USA Trending News. And if this video helped you see silver differently, share it with someone who's still focused only on price charts. Because Phase 2 doesn't come with warnings. It comes quietly, and then all at once.